one of the biggest online retailers, and why that stock is pummeled. All that and a lot more here on the Rebel's Edge. Bang!
It's official from the Chicago board. The CBO. What is it, John?
CBOE Global Markets.
Gotta love it. Gotta love it.
CBOE Global Markets, that busy pit behind me. Still a lot of the men and women that earn their livings in open outcry, something that doesn't exist on most trading floors, Pete, but it's still thriving here for a couple of the pits anyway. S&P 500 and the VIX both have pretty robust pits.
Yeah.
And it's great to see the floor still flourishing, even if it's a much downsized version of its former self.
Well, there's a lot of computers. They're paying Apple a lot of money for all the computers that are sitting in every one of those trading pits.
Yeah, I think you're right. Well, folks, let's get started with the Macro Minute, because he's Pete Najarian and he says, I got places to go, things to do.
I got stuff to do.
Pete, I'm going to say that buybacks are really what has lifted a lot of these stocks. And clearly, when companies come out and say, hey, we're buying back $5 billion, $10 billion, $100 billion potentially, because they never really put a date on it, do they, Pete? I'm thinking this is a lot of what's going on in the markets right now and why we've got such a disparity between the haves and have-nots.
Yeah, I think you're exactly right. We've seen so much of it. Obviously, Apple being the king at $110 billion in buybacks follows up the $90 billion in buybacks they had before that. But it's not just Apple. There's plenty of other stocks out there as well. I'm going to say this about the macro. It has turned back towards earnings, John. It's like we've slowed down a little bit. The volumes and the options have definitely slowed down from, call it 48 million a day to a little bit closer to 45, 46 million a day, just easing back just ever so much. But I think when we look at that, we look at names like Reddit today where they crushed it. You look at Lyft where they beat on their earnings. There's a lot of different things that are moving the markets. And right now, I think the macro side of things is right at those earnings themselves, because there's really not as much data coming in the data flows this week from that side of things right now. It's really about earnings.
Well, Pete, let's jump into Fantastic Futures.
Fantastic Futures!
And I'm going to say that our Fantastic Futures man would definitely be paying attention to the $1,600 drop in Bitcoin, because Bitcoin's back to 62,000, Pete. And that's not bad. It's been in this range for a while, but the question is whether it holds or whether we trade back into the high 50s again.
Yeah, I think that for me, John, on the Fantastic Futures front, I'm going to go right to Nat Gas. I mean, a month ago it was 158. We've gotten into the twos here and there, and January we were in the twos. Here we are at 227. So we're seeing a very, very sharp move to the upside from Nat Gas. We'll keep a close eye on that. We're seeing that. At the same time, we're seeing crude oil actually tumbling pretty far down, now closer to 77 than it was in the 80s. So interesting to see how that's been fluctuating around, but Nat Gas on a big run to the upside.
Yeah, we always like paying attention to energy, folks, because one way or another, it impacts almost everything we do.
Yeah.
All right, let's take a look at Twilio, Pete, because Twilio shares were getting clocked despite the fact that they beat on the Q1 results, but they provided soft guidance. And when you have soft guidance, that is not good. And that's why they're hitting the shares pretty hard right from the opening of the book on the quarter, Pete. They just said sold.
Yeah, and you know what, John? I think in this particular case, when it comes to Twilio, I look at those numbers across the board. They beat on their earnings year over year. They're up significantly. I think when you look at the guidance, yes, the guidance is slightly less on the revenue. I mean, we're talking about their guidance was 105 billion to 106 billion, and they were looking for 1.08 billion. I think people are getting a little bit too caught up in that. I like what Twilio's doing. They're doing buybacks. They're lowering their expenses. They're increasing their revenue. They're driving their earnings to the upside. Organic revenue growth was about 9%. I really think that people have misread this one, and I think this might be creating a really nice opportunity as it's taken about a 8%, 6% hit to the downside.
Well, we've got the exact opposite going on with Lyft, Pete, LYFT, because definitely, you know, I could make all kinds of jokes about, oh, the shares are lifting, but they are. Lyft had better top line results, up 28%, folks, year over year. They also had about a 21% increase in gross bookings. I'm not one of those people, Pete, because I use both Lyft and Uber, and I was finding fewer and fewer cars available to me in Lyft. And so I'm certainly not one of those people that's boosting up their numbers, but these were good numbers.
They were good numbers, and they've done something a little bit different. We all know that. Uber has put themselves out there as a company that's going global, or is global, but getting even bigger globally. They're also somebody who's moving food around, whereas Lyft has stayed where they are. They're staying in their lane. I think the impressive part for me about Lyft is they're making money, John. Remember how long you and I mean, even within the last couple of years, we were like, hey, look, you've been around a long time. You've been a publicly traded company for a long time. When in the hell are you going to start making a little bit of money? Well, they're starting to do that. And when you look at the year over year growth in earnings, I thought that was pretty impressive. Not only did they beat John, but the year over year is significantly higher. So when I look at Lyft and I look at all the different numbers, this one does make sense to me that it's up about 8%. I think it's a little bit cheap. I totally agree with you, though. I can't tell you the last time I rode Lyft. I always ride Uber. But somebody's out there doing it, and they were talking about all those gross bookings being very, very strong. So certainly they're doing it somewhere. They just don't happen to be you and I that are doing that.
Yeah, well, Lyft is one that I always love to pit against Uber, Pete, because frequently I did find in the past anyway that they would be cheaper for various routes, but lately not finding the cars. All right, Shopify, Pete. This is the one top of the show when we teased in with, hey, there's one of the largest internet retailers. That's Shopify. Of course, they're not the largest. The largest is Amazon, and Walmart is nipping at their heels. But Shopify, right there too, Pete, except this time they had very disappointing guidance. So they surpassed expectations for the quarter, but then had weak guidance going forward. Stock's down almost 20%. And the volume of trade is, I think, about 4 times normal turnover, Pete.
Yeah. Do you feel at all like this might be an overdone? I know that you and I focus on guidance all the time, and that is the most important thing. We all want to know what happened this past quarter, but we always want to know what's going to go on in the forward quarter. The volumes were up 23%. The revenue was up 23%. The guidance did disappoint. They talked about some of the cost inflation that they're dealing with. The margins improved immensely, John, to 51% from 47.5% a year ago. So I think a lot of these numbers look pretty daggone good. Profit margin, is there a concern there? Well, that's what they're saying. It'll be kind of interesting to see next quarter. Are they doing something where they're almost like playing with the market for some reason? I don't know, but I feel like this number, the disappointing number, wasn't that disappointing for me that the stock should be down 20%. Really? I'm not sure I buy into that.
Well, it's a big turnover of shares, so obviously a lot of people souring on it. It's down 40%, I think, from the highs of 2024, Pete. So that's a big dump out of this stock. But now we've got another one to talk about with a big dump, and that's Zoom. Zoom Information Technologies. It's down almost 30%, Pete, like 28% or something like that. People are just shunning this one. Piper lowered their recommendation on the stock. Higher than expected Q4 earnings were not enough to lift this stock, given all the ongoing weakness that they're experiencing. It was a pandemic darling, but my gosh, in January, Pete, the stock was $18 a share. Now it's underneath 12.
Yeah. Well, the 52-week high is 30, and they established a new 52-week low today of 1173. Might even have been lower than that. I haven't looked at it in the last 45 minutes or so, but yeah, this is one where I actually buy into the guidance. I think that they've got some problems. Operating income down, the gap operating income down about 35% year over year. That's a pretty tough number. So when they guide weak and they're giving us a lot of weakness coming into it, this is a double whammy. This thing deservedly should be hit to the downside. And I think there's plenty of time and plenty to wait for if you're interested in this name. I don't think you got to attack it at any point in the near-term future. They might have to show us next quarter that they've been able to turn the corner. This is one where I stay negative on this one based upon what we're seeing and how it's trading today.
Yeah, it's not luring me in, that's for sure, Pete. It's more or less like in a death spiral right now. We'll have to see how they break out of that. Mm-hmm. All right. Well, we love sharing these videos with you guys. And surprise, surprise, John and the Chicago Bears have another Caleb Williams because he was the number one draft choice in the whole draft. And he happens to be stuck right here with our Chicago Bears, Pete. So we're certainly hoping that he's the guy that can help turn the corner, and maybe for the first time in forever, we've got a real quarterback. We'll see. Jury's still out, obviously, but let's take a look and a listen to the video.
Overall pick, Caleb Williams isn't using an agent for his first NFL contract. Many people have criticized this move, but I actually think it was smart, and it's something that many other players will do in the future. That's because the primary goal of an NFL agent is to maximize a player's income through contract negotiations. This system has worked for decades, but rookie contracts specifically are different. Rookie contracts are now preset through the NFL CBA, and there isn't much room for negotiation, especially for the number one overall pick. So NFL agents typically try to sign top draft picks by offering other things. Some agents have a team of people to manage your schedule, booking flights and hotels, while others will provide players with $50,000
but what about
cash payments to cover pre-draft training. And virtually all agents are banking on a later payday.
He might have made more money last year at USC than he'll make this year in the NFL.
All out of whack with the introduction of NIL. Guys like Caleb Williams don't need these things because they have millions of dollars in the bank. Instead, Williams
he don't need these
hundreds of thousands of dollars by paying an NFLPA certified lawyer an hourly rate to review his contract, and then he can just work with an outside marketing firm that only gets paid on net new marketing deals they bring him. Number one overall pick, Caleb Williams.
I'll tell you what.
Well, he makes sense, right?
Yeah, it says it all. I'll tell you what, John, and forget all that for a moment. I think that was really fun. It was interesting, and I think that it makes so much sense how they've changed things over the years. You do not have to have an agent in your rookie year. I mean, it's kind of one of those things where you can kind of figure it out and whatever, and obviously he's going to go through the right different types of people to get this worked out. But I'll tell you, John, I look at your roster right now down there in Chicago, and I see DeAndre Swift at running back. I sure like that. DJ Moore at receiver, Odunze, Keenan Allen. I don't know, Kmet, the tight end. Your offensive line might be the only suspect part of that offense, but you sure did get a big boost this year. There's no doubt about that. That's pretty dang impressive, I think.
Yeah, and that's from a team, Pete, that did have 7 wins, I think.
Yeah.
I can't remember if we had 7 or 8. I think it was 7. But, you know, the part about him not wasting percentages on an agent and instead just paying somebody an hourly rate does make sense because, you know, if the agent can bring you marketing deals, great. If they can't, then go to a marketing company and get that.
Right.
You know, whether it's the shoe deal, whether it's Campbell's soup or whatever it is, you know, those are what you're paying somebody for, not for basically just putting their signature on a pre-done contract.
Right.
So it sounds like Caleb's got some good advice anyway. And I don't view this as being a pig. I view it as being smart.
I
so
agree.
We'll see.
Yeah,
we'll
I agree with you. And I'll tell you what, he's already figured it out from the NIL money when he was making about $3+ million a year at USC, John. I think he's already got experience in that category. All right, back to our sports. The scariest team remaining right now in the NBA. Now, here's what we've got. I'm taking a look at it, John. Boston, pretty amazing. Their home court advantage is unreal. They're 37-4 at home this year. That's a really good basketball team. They won 64 games. Timberwolves, you and I have talked about it. I think there is no weakness with the Timberwolves. I mean, the other night when they blew out Denver, and now they've only played 2 games, they're the champs. They still got to get through this whole thing. It ain't a done deal, but daggone it, John, they did it without Rudy Gobert, for crying out loud. The defensive player of the year, by the way. I mean, so they've got the 6-man award in Naz Reid. They got Rudy, and quite arguably, I could have said, you know what? How come Anthony Edwards isn't the MVP of the league? I've been saying all year, I think he is, and I think he should be, because he plays both sides of the court better than anybody. The Knicks, they've got Jalen Brunson, John. He's done an amazing job. The scariest team for me is Oklahoma City. And the reason I say that is they've got a big 3 that I don't know if anybody else can quite match up to them. Now, so far, obviously, they've done really, really well. They absolutely blew out the Pelicans and beat them 4-zip. Now they beat the Mavs the other night, 117-95. What an embarrassment for the Mavs. So you've got Shai Alexander, you've got Jalen Williams, and you've got Chet Holmgren. You've got height, you've got shooting ability, you've got dribblers, you've got guys who really know what they're doing. And by the way, these guys are too young to understand that this is a big deal. They're just out there playing basketball, John. So who do you think is the scariest team that's left? I actually, as much as I love my Timberwolves, I kind of look at OKC as maybe that team that's the scariest one that's left.
Well, I think I would go with your Boston pick being the scariest, Pete. And it's all because of that home court advantage. Yeah. Because nobody beats them there. If, for instance, Minnesota, who went into Denver and took 2 games from last year's champs, if Minnesota could do that against Boston, that would be amazing. But I don't know if that's in the cards, Pete, especially as you come down to the wire with these playoffs in the NBA. That's the scariest team to me, because OKC can be beat at home. Boston, man, that's a really tough nut to crack. So I'll go with Boston, but I do have all the respect for your guy Holmgren and all the studs that they've surrounded him with in OKC.
Yep. They've done a great job. I still love my Timberwolves, and I love their chances. I think everybody here, I'm in Minnesota right now. Everybody here in Minnesota is already thinking, oh man, when do we get to the championships? It's like, hey, slow, pump your brakes, slow down a little bit. This ain't over yet. Denver is the champions until they're not. So, yep. I think they're getting a little bit in front of themselves. John, I got a great one for you. Jared, do you mind hitting the sound? And I don't know if Jared's I sent him a picture or 2 that he might appreciate as well, and I think you'd appreciate as well too, John. A rapper that you and I. Oh, wait a minute.
Yeah. Gin and juice. That's right.
That rapper right cousin. There, John.
That's Snoop's cousin.
We spent a little too much time with that guy a couple of years ago. But anyway, a lot of fun. I'll tell you what, it's great. Here's the cool thing. The NCAA, first time ever, is allowing in a bowl game an alcohol distributor, okay? And who is it? Well, it's the Arizona Bowl, and it's played on gin and juice, doggy style. That's the bowl, John. So it's going to be the Gin and Juice Bowl. And it's all about Snoop, and it's about Dr. Dre, who a lot of people still refer to him as the GOAT. I was just listening to Jimmy Jam talk the other day. He goes, can't believe these guys are sponsoring a bowl game with their alcohol company. I mean, it's absolutely incredible. It's December 28th in Tucson, and it's the Midwest Conference or the Mountain West Conference against the Mid-America Conference. But how cool is this? And by the way, this is not just a freak show, one show up for Snoop. Snoop has that youth football league, 2005, he started it. USC football, he used to be at practice with Pete Carroll almost every day. His son ended up playing receiver at UCLA. So this guy's committed to sports. He's committed to the football game and everything. And how cool is this?
Gin and juice. Yeah, and he's committed to gin and juice.
Oh, let me tell you. And he kind of has a liking to the Ponytail Brothers, as he said on Twitter a couple of times. So we appreciate that. And John, I think we got to hit those guys up for some tickets to this game, because that's going to be a lot of fun. And I think there might be some gin and juice flowing at that stadium. What do you think?
I think you're right. And I think when we finish this broadcast, I'm going to reach out to Snoop and get into his DM and say, "Hey, Snoop, what do you say? Maybe we could help promote your December 28th bowl, the Gin and Juice Bowl."
I mean, how great is that? It's amazing that the NCAA approved it, to be honest with you. But you know what? In the atmosphere we're in now, it used to be Barstool Sports, by the way, but in the where we are right now, where we find ourselves, I think it's really interesting that they're allowing alcohol being any part of any of that. But they've gotten into the gaming world in the NFL, right? And what's gone wrong there, John? Not too much in the NBA or the NFL or the NHL. What the hell?
That's right. And real soon we're going to have all three major sports, hockey, baseball, and football in Las Vegas. And they always said you could never do that. So never say never, folks. This is going to be interesting.
Yeah, sure is.
Well,
fun stuff.
Make sure that you share the episode with a friend, folks. Let us know how you liked the longer format interview that we had yesterday with the great Lonnie Paxton, 3-time Super Bowl ring guy, long snapper for the Patriots and friend of Tom Brady's. That was fantastic to hear from him yesterday. Let us know what you thought. And we'll be back tomorrow at 1 p.m. Eastern Time.